What's up, everybody? So I'm going to try to make some more Canadian videos. That's why I sent a couple of posts recently asking for suggestions. I definitely know a lot of Canadian stocks, but I probably don't follow it as closely as I follow US stocks. So if there's any kind of popular ones that are, that are small, I guess I might not know about it, because I listen to the financial news, and they mainly talk about US stocks, of course. But here's a list, and I just pulled this list. I think this list might be like a 3 months old or something. So the market caps are a little different than actuals. But I think these are the top 100 Canadian stocks on the TSX. So these are probably all with probably not all of them in the top 100, but probably most of them are still in the top 100. Just the market cap's a little different. But just to give you an idea. So RBC, they have a lot of big banks, Canada. In the US, the banks aren't the biggest companies. It's the technology companies. Because the biggest company in the world is Microsoft, technology. Second biggest company in the world is Apple, technology. Third biggest is NVIDIA, semiconductor technology. Google, Meta, Amazon. So all tech. It's interesting to think about that, because I never really thought about it. I wonder if other countries, the biggest stocks are banks. Because the biggest stock in Canada, I guess the largest company in Canada is RBC, Royal Bank of Canada. Then you have Toronto Dominion Bank, second biggest. Shopify, which is kind of a tech company, I guess. They host websites. They're getting up there. I mean, they're pretty young, and they're already let me see, 133 billion market cap, so really big. Then you have the commodities, natural resources. Then you have the railways, Enbridge, the largest midstream company in the world. So this is larger than any U.S. midstream company. I own Energy Transfer, and that's the I think the third or fourth largest midstream company. I think Enterprise is the second largest. Reuters, I didn't realize Reuters was Canadian. Brookfield, I knew was Canadian. Scotiabank, another bank. Constellation Software. My favorite Canadian stock, I've said this for a while, Alimentation Couche-Tard. Suncor, another oil play. Bank, Lululemon Athletica. I just did a video on Lulu. They are headquartered in Canada. I think I knew that, but I forgot. Cenovus, lots of oil. TC Energy, Cenovus, Imperial, RBI, Loblaw, a really large supermarket, Canadian supermarket. I'm going to go through BCE, the annual report, because I just did a video on BCE. Sun Life Financial, Barrick Gold, if you want to get gold exposure. BCE, the telecom company. Constellation Software, I think I did a video on them once. The company strategy is to acquire a software company and hold them for a long term. So their business model is to acquire software companies. It has acquired 500 since it started. So vertical, when you see vertical integration, that means you kind of focus in one industry. If you're vertically integrated in the oil industry, that means you might operate in the downstream, midstream, and upstream part, all the parts of the oil and production process. Most companies aren't as narrow as that. Most companies just operate in one small piece of an industry, but some companies are very large. Walmart vertically integrates every industry. Well, that's not. They're a retailer. They're a vertically integrated retailer, I guess, because they don't manufacture. They retail. But you do have a lot of economies of scale, lots of overlap, because if you acquire a lot of similar companies like they're doing, then you might have like when I say economies of scale, say business A and business B merge, and if they both do the same exact thing, say they both sell. I don't know why this popped in my head. Fishing equipment. So they both retail. Now let's say they both manufacture fishing equipment, fishing poles, all the equipment that people use to go fishing, and that's what they both do, right? So when you merge these two companies, you're still going to probably need the same amount of factory workers, people actually on the front line, or a similar amount, because you can't really combine those jobs usually. But you don't need like two CEOs, for instance, and you probably don't need two CFOs. You probably can just get rid of one. Same thing with the accountant. Like some of the jobs the accountant does are similar. So when you combine companies, you can kind of create economies of scale and reduce all that overlap. And of course, you buy products at a lower cost, because when you buy more of something, you can usually get it for a lower price. Okay, so let's see. Let's go through the top 100, and then we'll talk about BCE. They claim Constellation is 100 bagger, probably not these levels, but when they got a few years ago. I don't know. Constellation software. Let's see. It's pretty. 76 billion is they never split, obviously. What's the index to track Canadian stocks? Like I would type in SPY to track US stocks. What's the ticker to track Canadian stocks? Like a basket of Canadian stocks. Well, I guess it was a 100 bagger. It went up about 150x from the beginning. So yeah, it was a 100 bagger. Now, obviously, 76 billion. Unless it becomes one of the top 10 largest companies in the world, I don't think it'll be a 100 bagger. But yeah, that's really amazing growth. In 2023, their growth they almost doubled in the past year. Well, went up 50%. Okay. Another Agnico Eagle Mines. I think that's gold mainly. A financial a Canadian bank. Nutrien, they sell potash for fertilizer. Financial company CGI. Like CGI. TELUS, the communications company. Franco-Nevada, the mining company. Wheaton Precious Metals, another mining company. The Dollar Store. Yeah, potash. They sell potash for fertilizers. A Telecom, the pipeline, Pembina. I think that's a midstream company. Fortis, George Weston, Hydro One, Tourmaline. I think that's another midstream company. Brookfield Asset Management, a mining company. Ritchie Brothers. They sell equipment, like farm equipment, I think. I looked up, I had to actually was researching them to buy something. I don't even see the ticker. Is it private now? RBA. I wonder why it doesn't. RB Global. Yeah, I looked them up once because I wanted to buy. I can't remember what I wanted to buy. Maybe a tractor. Metro, Arc Resources, CCL. Somebody asked me to look in CCL. Kinross, the gold miner, Lumine Group. So some of these I'm not too familiar with. I did Pan American Silver. I did a video on them. Empire, Canadian Tire. That's popular. That's like a convenience store type business. Bausch & Lomb, the contact lenses. Always wanted to invest potash stock, but it never looked like I could get a great return. It's really timing commodity stocks. Parkland, that's a REIT, I believe, right? Parkland. NextGen. I think I've done that. Capstone. Air Canada. Look at Air Canada's up there. So let me know if there's a. Here's a REIT, Canadian Apartment Properties. Let me know if there's a Canadian stock. I usually do my DCF. PKI. There's a gas station. Did I pass PKI? That sounds familiar. Are you talking about Parkland? PKI? It's a gas station. I was way off. What was I thinking? It's oil and gas refining and marketing. I think I'm thinking of another stock that starts at Park. Maybe I'm just Canada Land of the Monopolies. Have you done a video on how to build DCF model? I've done a few. I'll put it. There's like a how-to videos, like a how to DCF. Okay. I can't remember what the name of it is. Yeah, email me. Canada. Yeah. Damn. Where's the Okay. Well, let's go to BCE. But if there's a Canadian stock you want me to do like a fast DCF on, let me know, and I could try to do it right now. But what do you guys think of BCE? Now, let me pull up. I think I have a breakdown of everybody in the industry. I hope I didn't update it. Oh, good. I still have it. This is the top 20 telecom companies. And this is all U.S. stocks. Well, BCE and U.S. stocks. So all these numbers are in U.S. dollars, even though I converted BCE's their numbers to U.S. dollars, just in case. So their revenue doesn't match the 2023 revenue because it's just U.S. dollars, because this is the I converted also the market cap from Canadian to US dollars. So it's kind of like apples to apples you're looking at. So BCE, it's trading at pretty good valuations. I mean, not great value. I thought it was better. I don't know why. I just did a video on Cineplex. That's priced for bankruptcy. So their price multiples are like almost at bankruptcy levels, meaning they're so low. Either the companies go bankrupt or it's just a great value. Which sounds weird, right? Why would it be either either bankruptcy or the stock's going to go blow up? One of the two. It does make sense if you understand, but if you need me to explain it, let me know. So they're a pretty big company. I mean, they're sixth largest company if you can compare them to the large telecoms in the US. Obviously, these top four are giants. AT&T, Comcast, Verizon, T-Mobile. These are huge companies who spend, well over $10 billion in CapEx. BCE is only spending $3.5 billion. But BCE has such an attractive dividend, but it's not sustainable. Let me show you why. I should have just copied this. Here it is. Let me just copy this tab into my other file. I don't like to mess with this file too much. That's my main file while I do all my videos. So I just did a video on BCE. And this is why it's not sustainable, okay? The current share price is 45. I'm at 65. And I actually gave them, they should have had a WACC close like 8. The WACC is about 8 for this company, but and you see the stock price will be 90 with an 8 WACC. I actually raised the WACC to force a lower stock price because I just didn't think 80 is doable. And my goal when I do a DCF is that within a year, it'll hit my price target if I'm right. And I'm right. I wouldn't say not a lot, but I don't know the percentages, but I'm definitely not right 100% of the time. But if I am right, it should be within a year, it hits my price target. And this is a much easier stock to value. When people give me stocks of companies that are that have never made a profit, that are still it's total guess game if those stocks will ever become profitable. And so, but I still do DCF but it's a pure guess. So they're trading at 45 a share. I should put market cap here. I'm always like changing my my files. I don't know if you've watched my videos, but it looks a lot different now. I've added more to the finance section. What the fuck? Okay. Yeah, I'm adding more to the finance section to just give it a little more color. Why does it take so long to get this set up? Okay. So the market cap is 41 billion. The yield is 8.7%. Let me show you. I'll show you the historical yield for this company. And the thing is, when you're looking for a high dividend, I mean, you can't just search the highest dividend stocks, because you'll see dividends like 50%, 80%, but those stocks will never pay a 50 or 80% dividend. It's just a timing thing. They're going to cut their dividend to probably close to zero. So you'll never get a big dividend. But when you look at a stock like this that's been paying a high dividend for like 40 years, there's not much of a risk of them cutting their dividend. I'd say the big risk is that your stock price will go down a lot. So you're going to lose a lot. Like if you put $1,000 into the stock and say you get that 8% dividend, so you made $800 in dividends for the year, but your stock price goes down 10%. So you lost $20 on your investment. I know you didn't sell it. You put 1,000 into it. After a year, you get 80 in dividends, but your stock price goes down to 900. See, that's what you have to look at whenever you buy any stock. You have to look at the potential price appreciation, also the dividend. So that's the main risk. But they just can't afford that dividend, because 8.7% of 41 billion is 3.5 billion. So that's how much dividends they have to pay their shareholders in the course of a year. Because that's what it means. If you own one share, if you own $100 of this stock, you should get $8.70 in dividends for the year. So all the shareholders totaled up to 41 billion. So that's how much dividends they're paying out. And you can see the past 4 years, they haven't even hit that level of 3.5 billion. High Tide is still going. It's up a lot today. So they can't afford 3.5 billion. They're paying it, but you don't want to buy it based on what they paid in the past. But how do they pay it if they're not generating that much cash flow? Well, they just add debt, right, to fund it, or they dilute shareholders, but it's usually just debt. So they're going to have to lower the dividend, or the stock price will go up a lot. And well, the only two ways they can afford it is either lower the dividend, or they have to generate more free cash flow. But if the stock price goes up a lot, because that is an attractive yield, and if they're able to pay that somewhat consistently, people will start buying the stock, which will force the price higher, which will push the yield lower. But if you pick up the stock now at 45, it doesn't matter if the stock price goes up, because that's your cost basis. And even if the stock price goes up to like 60, 65, and the yield goes down to 6.5%, the people who bought at 65 get a 6.5% yield, but you're sitting pretty getting your 9% yield because your cost basis is 45. Just like Warren Buffett, his cost basis is like $1 for Coca-Cola. So every year, if he has like $30 billion worth of Coca-Cola, he's probably getting $30 billion. If his cost basis was $30 billion, I'm sure the value of his Coca-Cola, like if he why is it nothing's ever like if he invested $1 billion in Coca-Cola, say in 1970, and that billion is worth $25 billion today, but every year he gets $1 billion in dividends because his yield is 100% because his cost basis is from back in 1972, while everybody else is buying at the current prices, and their yield is like 3%. Bell is also laying off people. Yeah, they're doing a lot of cost cutting, but that's just the name of the game. Meta did that, and look at Meta stock went at 5x'd. A lot of companies are doing that. Unfortunately, companies get a little kind of like gung-ho. They hire a lot of people. They look to scale and grow. And then they realize there's certain divisions that need to be trimmed a little. They need to save a little, cut expenses. So their revenue is kind of flat. So here's so in the past 5 years, their revenue is only up 1% on average for the past 5 years. So it grows about 1% a year on average. And this is kind of like one of the biggest indicators of stock price movement. Of course, it's after the fact. Because when you look at this chart and you see T-Mobile's 190 billion market cap, Verizon's 180. But then you look at the revenue, like Verizon is a much more revenue, 130 billion, T-Mobile's 80 billion. And the main why are people paying so much for T-Mobile when Verizon is generating so much more revenue? It's mainly they're not growing anymore. I mean, sure, their revenue is high, but it's like kind of flat. So in theory, in 10 years from now, it'll probably be 140 billion. It'll barely grow. Where 10 years from now, T-Mobile might be 200 billion. So that's why, because a 5-year annual revenue growth rate is 13%. If you ever look at companies that seem extremely overvalued, just look at their growth rate, the revenue growth rate, and you'll see it's really high. Because a lot of people will buy a stock like Verizon or look at Vodafone. Look how that's the most appealing stock on this list. Look at they have the best price multiples. They're trading at 1/2 of revenue. So their market cap is half their revenue. I mean, in order for their revenue is double their market cap. If T-Mobile's revenue was double its market cap, it'd be 400 billion. It's only 78 billion. So that's why it's such an attractive price multiple. So everybody should buy Vodafone, right? Because look how great their price multiples are. But they're shrinking. Their 5-year annual revenue growth rate is 2%. So in theory, if they keep shrinking, then they're gonna shrink into the 25 billion market cap. And if T-Mobile keeps growing, they're gonna grow into the 190 billion market cap. So it seems overvalued now, but investors don't look at now. They look at 5-10 years from now. But it doesn't always work out this way, where the most overvalued stocks are the ones that are growing the most, and the most undervalued stocks are the ones that are shrinking. If that's not the case, if you see a stock that's flat the past 5 years, their revenue growth, but they're still trading at a high level, it could be other things going on within the company that are people are buying it and forcing the stock price so much higher. But BCE's price multiples aren't that amazing. They're good. Price of free cash flow 13, PE of 17. I guess so. Let's look at their reports. So BCE, so it's annual report. I mean, I think most of Canada uses BCE. But is their technology kind of outdated? Is that the problem? They say 86% of the Canadian population uses their 5G network. If that's the case, this stock is like an amazing value. If 86% of the country is using their 5G is the more advanced technology. They provided a 30% shareholder return in the past 4 years. The way they calculate that is they look at the stock price appreciation and the dividend and combine that. So they say over the past 4 years, you would have made 30% on your investment. That's why it can be a little bit hard to, when you look at a stock on a chart. Let's see if it's like that with this stock. Okay, so unfortunately it's come down, but like let's say you bought it in March 2020, which is where it's trading at right now, at 35, and it's 35 today. So they're trying to convey to you, you didn't make nothing on the stock. We paid a 7% annual dividend. So when you compound 7% over 4 years, you made like 35%. You know, if you bought it here in March 2020 and compared it to April 2022, then you killed it, because you have a 7% compounding dividend, plus you have about 50% of stock price appreciation. So you might have doubled your investment. Big investment costs in fiber optic infrastructure. That's the thing with telecom companies, amongst other companies, but telecom companies, it's so expensive. Because even if you don't grow your business, even if you're not adding new, because like if Tesla wants to grow, they need to get new factories. If they want to grow their vehicle business, they have to buy new factories and equipment and staff the factory and get the approvals, the licenses. So there's really no other way to grow. And then if they want to maintain they probably won't want to maintain their car sales, but if they did want to maintain, it's not that extremely expensive to maintain. Like I'm talking about maintain the factories. but it's so expensive. Like if they wanted to just maintain this 86%, like say they weren't interested in growing at all, they just wanted to maintain. It's just so expensive just to, because once you lay these cables down and once you build all the infrastructure, it's not like then you're done. You can just go home and collect your paycheck. It's like there's always things that go wrong. There's always issues with the lines. There's always like things. So there's so much maintenance. So like half their CapEx is just maintaining their original CapEx spend, and then the other half is to grow the business. I mean, that's why, I mean, they spend so much money every year. Some of these companies, $15-20 billion in CapEx. Bell has the fastest network, fixed optic, but Canada just said they have to open it up to other companies. What do you mean? You mean let other companies sell in addition to Bell? So they expanded their pure fiber network to 630,000 homes and businesses in 2023. They're producing content. They produce a lot of content. In 2023, they produced 38,000 hours of content. I didn't realize they made content. Did you guys realize that? I guess it's streaming content, right? That's what it means. Let's see. Yeah, a lot of this. They increased their dividend 3% in 20. They plan to increase their dividend 3% in 2024. So not only can't afford the dividend payment, but they're increasing it. So they need to really start generating a lot more free cash flow. They're really dividend yield is 7.4%, and the stock keeps coming down, so the yield keeps looking amazing. They're increasing it. So the 16 straight years of dividend growth. That's what these companies do, is that they have to grow the dividend so they can continue saying. They can't not grow it, because then they're going to go back to zero. So they can start saying 20, eventually 20 years, 30 years of dividend growth, even if they can't afford it. They're hoping they will be able to afford it one day. So only a 2% revenue growth, which is interesting. They're growing their dividend more than their revenue. Earnings are down 20%. Let's go to the income statement. Okay. So 24.7 billion of revenue. Okay, most of that is from their communications, 22 billion. And they do own a lot of sports teams. That's most of their Bell Media, the sports teams. They own the Canadiens, right? Montreal Canadiens, or part of the Canadiens. The Maple Leafs. They own, I think, one of the major soccer teams. So they have a really big, but I'm not sure. It is positive adjusted EBITDA, 700 million of adjusted EBITDA for the Bell Media. So it's profitable. I mean, the communications is where all their ET. Yeah, I own ET. That's great. That's one of my better performing. Operating revenue. So, I mean, as long as they're profitable, I guess it can't hurt, right? To have the media. You'd be surprised how many companies these big enterprises own. You think like Coca-Cola sells, beverages, but if you look at the companies they own, they do so many things. So Bell Media is Canada's leading content creation company with assets in television, radio, OOH. What's OOH? I'm sure I can find it. Bell Media partners with advertisers to help connect brands to consumers through video, audio. OOH. I hate when I don't know something. Out of home. Okay. Out of home. Out of home and digital platform as well as through advanced advertising technology. I guess this is how Buffett does it. He goes through their report and tries to understand the business. And he's not always right, but he's usually right. I think they own the Raptors, right? Here we go. Okay, BCE holds investments in a number of other assets, including a 38% interest in MLSE. Is that Major League Soccer? A sports entertainment company that owns several sports teams, including the Maple Leafs, the Raptors. This is Toronto FC. That's the soccer team, right? Toronto Football Club. Oh, it's not soccer. It's football. That's a different sport, right? I'm joking. I know that's soccer. And the Toronto Argonauts. That's the Canadian football team, the Argonauts. I always make jokes like that, like I'm ignorant. I always make those types of jokes, like okay. A 50% indirect equity interest in Glentel, a Canadian-based connected services retailer. I never heard of that. 20% indirect equity interest in entities that. Okay, so 20% in Montreal Canadiens. Gretzky played for Canadians. No, the Oilers. He started with the Oilers. I have a Gretzky rookie card. I bought it last year. He was the Oilers, the Kings, and the Rangers. Am I saying that right? Oilers, King. Oh, he played for the Blues. I didn't realize that. I don't know who Indianapolis Racers are. That must be like a minor league team. They were a major league hockey team that played in the World Hockey Association for 74-78. Did you know he played for the Blues? I didn't know that. I guess just one season. Rangers, I remember, because that's when I was a Rangers fan. I come from New York. I was never big into hockey, but I followed it a little bit. They're one of the largest employers in Canada. They employ 45,000 people. Maple Leaf Sports and Entertainment. Yeah, that makes more sense than what I said. Maple Leaf Sports and Entertainment. So yeah, so they own. So when you own a sports team, you make money from ticket sales at the stadium, and also selling food and drinks at the stadium. But you also make, I think, probably more money from selling like jerseys, like team jerseys, or hats, or different things like that. That's probably where most of the money is. I mean, you get advertising revenue. So when businesses advertise, like on a scoreboard or wherever, and then your your revenue is like tickets for the game, and then like selling merchandise, and then your expenses are probably, your huge expense is payroll. It's probably so expensive relative to the whole business, paying the athletes. Would you mind looking at Stag? Oh, Stag. Yeah, I looked at Stag before. Thanks for the donation. I appreciate it. But it's just like a business, owning a sports team. It's a business. That's how you got to look at it. Soccer is football. I know. I was joking. I said football. That's not. I said that like I jokingly say things to sound ignorant. Okay, Stag. Are you talking about for like 10 minutes ago when I said? Well, no, we definitely know what soccer is. It's we definitely know what soccer is, but a lot of people, or some people, probably wouldn't associate soccer with football. Like if you said football, if I was in Europe and someone started saying football, I would know they meant soccer, not American football. But I'm sure like a lot of people wouldn't like realize football. Because anytime you talk to somebody in the United States, if they say football, they pretty much mean American football. Unless if I'm talking to somebody in the U.S. that's from Europe, then I might not be sure what they're talking about. I guess it's the context of the conversation too. That probably would help. Stag. Yeah, I remember this. I'm trying to think what there's no future growth estimates. There's just market cap. WAC 0.8. Okay, let me do my traditional model. Drone delivery Canada is getting pretty fucked right now. Please convince me to dump it. I would probably dump anything that's related to drones. Like, why would you think that's a good investment? It's cool to own one. Investing in one. What is drone? Is that delivering mail? Is that the purpose of the company, to deliver mail to like places that the mailman can't get to? Let's see, 0.7, 0.75, 0.8. $44. It seems undervalued. 40. I'm in like the high 40s to low 50 range. The thing is, when you invest in a stock that pays a high dividend, I think oftentimes it appears undervalued because they pay a lot out in dividends. So if they didn't pay the dividends, the stock will go up a lot because they would be retaining the cash and growing the business. But since they pay dividends, there's kind of like a cap on the stock price appreciation. Because that's why these tech companies usually don't pay dividends, because they want to keep growing and scaling, and the stock price keeps going up and up. Like, you can't really get $1 trillion market cap if you're paying like 80% of your earnings in dividends. It's like impossible to be a huge company. Like if like some of these companies never paid a dividend, their market cap would be so much higher. But most people wouldn't invest in them because there's no upside when you invest in like a Telecom, for instance, if they didn't pay a dividend. Stag Industrial. Okay, here's their latest presentation. Let's just look at this for a minute. Do you guys ever look at Simply Wall Street? Like, it shows you the risks and rewards. So it started trading in 2011. It peaked at 47. So it's down like, what, 20% since the peak. But it's a pretty steady growth. I mean, the data in Simply Wall Street, I don't think is amazing, but I think the layout makes it kind of like very user-friendly and kind of easy to like navigate. I prefer actually Yahoo Finance. I get all my data from Yahoo Finance, but I like the layout of this. Oh, look at that, 46. What was I? Wow, I didn't even see their price till now. I usually don't see the price. I don't ever look at their price until I show it in the video. Analysts are at 40. But can they afford the dividend? I guess that's the big concern. Also, the payout ratio is 64%, a 4% yield, so it's nothing crazy. I think if you look at a company that's been paying a dividend consistently for like 10 plus years, it's probably a pretty safe dividend. No, I don't invest in BCE. I don't think I would invest in BCE. I don't know. I don't like Canadian stocks. No, I'm joking. I don't know. I'm not a big fan of Telecom. Let's see the Stag presentation. IPO'd in 2011. They own a pretty good amount of buildings, 569 buildings. They're in 41 states, so they're pretty much almost all over the country. 75% payout ratio. That's a problem with like REITs. They have to pay out so much dividends. It's hard to grow, so they have to use debt to grow. So that's why they have so much debt. 2.6 billion of debt. I don't really have much cash. Total product under construction. So this is millions. I guess, does that mean millions of square feet? 60% of U.S. construction pipeline is greater than 300,000 square feet. So you used fast graphs before. I know the guy on fast graphs. Did you like it? I've never used it. I never used like these like Simply Wall Street or things like that until I started the channel. So here's Texas they have a lot of projects in Texas. So dark blue states is where they have a lot of things going on. The really light color, they don't really have much. And these states, they have 0 in the gray. Market rent growth. So Stag rent has grown 34%, while the market's grown 25%. So they're charging more. So maybe they just offer a nicer property or better amenities to charge more. But is that the next thing to like commercial real estate? I've been hearing that could be the next thing to crash. And if commercial real estate crashes, which it's been struggling, I think, then banks will start to struggle or go out of business, because most of banks, most of their loans are for commercial real estate, and if people default on those loans, then the bank won't have enough money to pay back their depositors. Everything's kind of like connected, like trickle down or connected. Because the commercial real estate defaults, then the banks Some definitely regional banks will default. But the big banks, the JP Morgans, will get stronger because they can pick up these smaller banks. Conservative balance sheet position to support growth. Smart centers. There was a REIT I was looking at once, and that they had Loblaw supermarket as their anchor at a lot of the shopping centers. Is that the same one? Is that Smart Centers? I don't remember which REIT that was. I wish I could get somebody from one of these companies to do a live stream with me. It would be really interesting to hear them talk about the company. So this is what you kind of want to look at: FFO, funds from operations. When you look at a REIT, it's net income plus depreciation and amortization minus the gain on the sale of real estate. Did I say that right? Yeah, I said that right. Net income plus depreciation and amortization minus the gain on sale of real estate. Net income plus, okay, yeah. Because depreciation and amortization is subtracted out of net income. So you add it back in. And a lot of companies report AFFO, adjusted funds from operations. So they strip out things like, I think, stock-based compensation and other things. Rio Tinto? Is that what you mean? Yeah, they're the British mining company. Vale is like, I like Vale better, but they're in Brazil, so usually the stock doesn't go up as much because Brazilian stocks carry some country risk. I remember it was getting really low. I did a video, and I think it was like, I can't remember when it was. Like, a lot of people made a lot of money, but I don't know if they sold. So they might have came back down. But that's what's hard about commodity stocks, is that even if you're a really good company, it can't just go straight up like a Microsoft can. Imagine investing in Argentina. We can never make money investing in Argentina. They're always struggling, it seems. They're always in a so much inflation. Like, it's just, that's, if you live in like a country like United States or Canada or Germany or the UK, like, the government does such a good job at managing the money, because you could work 30, 40, 50 years, and if the government screws up, it wipes out your whole nest egg. If inflation gets out of hand. How come it's not showing anything? Oh, images. Is this Argentina? I don't even know if this is Argentina. Okay, Argentina. Look at the inflation. Like, it was fine up until, like, I guess the 80s. Remember when we hit like 9% and everything was going crazy and we were like, the world's ending? They're going on 40 plus years at double digits, and they're at pretty high double digits now. Look at 30%. If we had 30% inflation, people would go nuts. They'd be like, "Oh my God, the gas prices, the food." Well, Venezuela is the worst, right? Venezuela and South Africa. Currently, I don't check this stuff on a day to day, but so they're the worst. So they're currently 276 percent inflation. 276%. Turkey. I guess South Africa fixed the problem. What happened to Venezuela? They were in really bad shape. They don't even show up on this list. They were like 2,000% due to recent hyperinflation crisis in Venezuela. The average inflation rate in Venezuela is estimated to be around 200% in 2024. This is well below 63,000% in 2018. Like, it just kills your economy. You just can't. What stocks do you think are the best? I mean, if you just want to stick with the trends, which seems to work, I always thought CrowdStrike was a good, has a lot of upside potential. But I've been saying this for a few years now, and it's gone up so much. So I had a family member's money invested in CrowdStrike. Pretty much everything in CrowdStrike. And they switched to a professional financial advisor. They switched it. Of course, they had to switch it like a year and a half ago. No, like 2 years ago. It was right at the worst time. It was at the end of 2021. It was December 2021, I think. Oh no, it was January 2022. So it was right here. So it still came down a lot more. But look at it now. They would have made a killing. How Nvidia's that's been coming down a little bit, right? That's under 900. I wanted to short it, but it's so hard. You don't even get much. I mean, it hasn't really come down much from its peak. I mean, what was it? 950? I guess if I caught it at 950. But so many people are shorting it. Oh, Canadian. I always talk about alimentation couche-tard, but I think it's doubled since I started talking about it. Because I started telling people to buy it probably in 2021. Yeah, so it's already almost doubled since I looked into it. But it was up to 86. It came down to 75. So it could be a little overvalued. Are there any MLPs you like besides ET? Well, my other favorite one is what's it called? Let me pull up the list. If you're in Canada, Enbridge is the biggest midstream company in the world. So I think that's a good. MPLX. MPLX I like a lot too. But I mean, you're more than welcome to do anything you want, but it's getting a little. It kind of, it moves a little bit with oil prices. So oil prices are getting a little, kind of peaking a bit. So unfortunately, commodities are more of a timing game than a regular stock. Because if you time it wrong with a commodity, it could be 20 years before you see any upside. So I'm not sure if there's any benefit, but that's just I could be totally off with that. Let's see against Brent crude. So I don't think it tracks it as much as a downstream and upstream stock, but it does track it to a point. You can see oil is much more volatile. Like they were tracking each other for 2019 to 2020, and then oil shot way up. This, of course, went up more steadily, and oil came down, but now they're kind of merging together. Suncor cut 20% of its workforce. They will kill their EOS going forward, especially with an increase in oil prices. Enterprise is a beast of an MLP. Yeah, Enterprise is good too. Let's compare some MLPs. Enbridge, EPD, MPLX. Okay, so if you invested five years ago in these four midstreams, MPLX is up 29%. Everything else is flat. EPS? What's EPS? EPS? Earnings per share, you mean? Is that what you mean, EPS? You're not factoring. Right, that's what I'm about to say. But when you look at stocks like this, and I said that earlier too, like if you're flat with a stock like this, you're actually probably up 30%, because if you get a 5% dividend compounded over 5 years, it's probably close to 30%. CNQ, Canadian Natural, that's in 5 years. Let's see, in 2 years, ET, I bought it 2 years ago. I bought it in 2 years ago, but I think I'm up more than 38%. I thought it was up like 50, 60%. That's weird. Oh, I think I bought it in January. So maybe that's why. In January is 70%. Okay, that makes sense. So look how plus I've been getting like 20% in yield. So I'm up about 100%. Enbridge is down 5%, 6% in the past couple of years. I wonder why Enbridge is struggling. In the past year, Enbridge is down 8%, and these others are doing really well. Look, CNQ, look at the RSI, 80. So it seems extremely overbought. Yeah, overbought. But I don't really look at the RSI. I never understand it really. In February, look how much the RSI was 40. That would have been a great time to buy it. I guess the RSI was right. So you probably want to avoid it. But the thing is, when will the pullback be? How long will the pullback be? Okay, let me see if my dog's okay. I think my dog's on his last days. He's 15 now. Yannick, what's up? Thank you. Parex Resources. That's funny. There's a ticker, Parex. PXT. Has anybody ever heard of this company before? Parex? Okay. This might be a little tricky, but 22.3. Colombia runs geographical geopolitical risk and may have no idea what's going on with the politics of Colombia. What oil companies or natural gas companies are you invested in? I'm only invested in ET. In terms of any commodity, really. That's the only commodity I'm invested in. I mean, I own Berkshire Hathaway, which owns a lot of commodities, but Parex. Enbridge was getting in trouble because I believe it was a line 5 under Lake Michigan has major weakness. There's always problems with these types of companies. Like if you do if you mine like a gold miner or an oil and gas company or a telephone company, there's always like people die or there's fires or there's, I mean, it's just you can't get away from it really. Their revenue dropped a lot from over 1.6 to 1.4. I wonder why it dropped so much. P4. on. I changed the formulas. I wonder if, so I'm at 35. I'm at 35. Let's get back to this. Looks like a good value. Okay. Let's see. Parex Resources. Okay. Oh, they're Colombian oil and gas company. They buy back a lot of stock. Okay. Quarterly dividend of 37 cents. Active share buyback under current normal course issuer bid. Berkshire has probably been waiting for a decade to buy distressed assets. If a downturn comes, Berkshire will gobble up much. Yeah, a lot of these countries, they tend to trade at a pretty big discount. Yeah, people are a little concerned about holding the stock. Okay. Oil and natural gas sales. So it went down a lot. I wonder if that's because of the price, underlying price of the crude oil sales. That's pretty much their entire business, crude oil. They produced more oil in 2023 compared to 2022. Yeah, but the price per gallon was 87. Now it's 71. So yeah, so the price per gallon has gone down, so the revenue has gone down. Are they still profitable though? Let's see. So they still have a lot of net income. Yeah, these companies usually are very profitable, like Vale. You know, I know Vale does something different, but these South American countries, they can be really, really profitable, but the stock price doesn't move. And yeah, they're so vital to the country they're in. Like they're probably like one of the biggest employers in the country. Do they list the employees? Well, it's only 449, so maybe not the biggest, but Pyrex. Oh, they're in Canada. I thought you said Colombia. Oh, you talking about something else. Pyrex needs Colombia. Do they sell? Is that where they sell their? Oh, they operate in Colombia. Okay, Pyrex resources are in the business of exploration, development, production, and marketing of oil and natural gas. Okay, so they operate in Colombia. It's always a risk in Latin America, but I invest in PBR. Yeah, PBR is good. It pays a huge dividend. 20% dividend. That's the only time a dividend is sustainable if it's in another country, because the price is just artificially suppressed, which raises the dividend, and they could afford it. A lot of these companies are swimming in cash. I mean, and they're really swimming cash. They have over 30 billion Brazilian reais. So 32.3 billion. 32 BRL to US dollars. So that's like 6.4 billion US dollars. 6.4 billion US dollars. And the market cap is 100 billion. So it's not that small, actually. It's a pretty good size. 100 billion. Yeah, it probably usually has a low RSI in the 50s. Yeah, it got real low. It's doing really well. Like usually there's like a pullback with these types of stocks. Like you'll see like a big run up. Like in 2021, there was a huge run up with most stocks where they were peaking in 21, 22. And then there was a big crash. And then it come back up too much. But this is like came up past its 2021 numbers. It's still actually trading below 2019 numbers. Well, this is hard to look at. Look how high it was in 2008. This is just how a commodity stock is, you know. It just goes up and down, up and down. 100 Brazilian reais is like 18 billion US dollars. Yeah, that's 20 to 1 about, right? No, but it's not 18 billion US dollars. This is in US dollars. We're looking at the ticker in the US. If we were looking at the ticker, I don't know if they traded. I don't know if is there even a stock exchange in Sao Paulo? Okay, there is. So Sao Paulo, it's going to be what you. Okay, so 500 billion, which makes sense, because 500 billion divided by. Does that make sense? 500 Is it divided by 20? Am I doing the right math? Doesn't make sense. Wait. Okay. It's 5, so it does make sense. You divide it by 5. It's 20 to 1. I'm doing it backwards in my head. Yeah. So 500 billion Brazilian reais is equal to 100 billion US dollars, which makes sense. Yeah. Hey, Godskin, what's up? But this 500 billion is equivalent to this 32 billion. That's apples for apples because they're both in Brazilian reais. Oh, that's Parex. What's going on? Where are the financial slides? God. Okay, here, the management report. Okay, it is in reais. So they report all their financials in their native currency. Because some foreign companies report in US dollars. So 511 billion for 2023. Okay, so the numbers, in Yahoo Finance are in US dollars. Because you see it says 124 billion for 2022 revenue, and it actually generated 640 billion Brazilian reais. So the numbers are actually in US dollars, even though it says currency in Brazilian reais. Vale does the same thing. Like it says it in Yahoo Finance. That makes it a little confusing. They're reporting US dollars in Yahoo Finance, so you could compare it to the. So this is 32 billion US dollars, not Brazilian reais, and 40 billion for 2022. And you can prove this because. Oh boy. Oh. So you see free cash flow for 2022 is 200 billion. And they list 40 billion. 200 billion Brazilian reais divided by 5 is 40 billion US dollars. So, but Yahoo Finance says this. That's why sometimes I do the video and people go, "You're an idiot. You didn't convert." Like Yahoo Finance numbers, and I say, "Well, because Yahoo Finance is wrong." What is their debt denominated? I wonder because the revenue must be USD, right? Yeah, all Yahoo Finance is USD. Everything's USD. You have to go to their financials to confirm what you're looking at, because it can really be. But I actually have to go. I have to go to work. So yeah, thanks for joining. Fun stream. I'll talk to you later.